Hello, my dear students, and welcome back. I know. Exams are just around the corner, and this chapter, recording of transactions, can sometimes feel a bit heavy. But don't you worry, in the next few minutes, we're going to make it super simple, I promise. We'll break it all down so you can just walk into that exam hall feeling totally confident. Look, all this debit, credit, assets, liabilities, it sounds like a whole new language, doesn't it? But what if I told you it's actually just a game? A simple game with a few easy rules. And once you know the rules, it all just clicks into place. So, you ready to play? Let's do this together.
Okay, let's get started. Every good story needs a hero, right? So for our story today, let's meet Rohit. He's a brand new entrepreneur. And just like in your textbook example, he's starting his very own business. He's put in 5 lakh rupees to get things started.
Now imagine Rohit. His business is starting to move. He's buying stuff, he's selling stuff, money is coming in, money is going out. Phew! How on earth does he remember everything? If he doesn't write it all down properly, it's going to be a huge mess, right? Well, this exact problem is what accountancy is here to solve.
So how do we solve this big puzzle for Rohit? Well, it all, and I mean everything, comes down to one single magical rule. This is the #1 most important rule in all of accounting. If you get this one thing right, trust me, you're already halfway there.
And here it is, the accounting equation. It says that assets are always equal to liabilities plus capital. Okay, simple words. Assets are just all the things the business owns, like cash, the building, furniture. Liabilities are what the business owes to other people. And capital is simply the money the owner, Rohit, has put in. The best way to picture this is to think of a magic weighing scale. You know, a terazu. On one side, you put everything the business owns, all its assets. And on the other side, you put everything it owes, the liabilities and the capital. The magic rule is this scale must always be perfectly balanced. That's the secret.
So if Rohit buys something, how do we know it really happened? We need proof. Just like when your mom sends you to the shop. You bring back a bill, right? In business, this proof is called a voucher. It's the pakka bill, the solid evidence that tells us exactly what happened, for how much, and when.
All right, now that we have our magic balancing scale in mind, let's learn the special language of our game. You've heard these 2 words a million times, debit and credit. Don't let them scare you. Just think of them as left side and right side. That's it. Let's look at the simple rules for them. This little table here is your cheat sheet. It's perfect. Debit, or DR, is just the left side of an account. Credit, or CR, is the right side. Now look at the pattern. To make an asset or an expense go up, you debit it. But to make a liability, capital, or revenue go up, you credit it. And to make them go down, you just do the opposite. Just take a second and look at this. This table is the key to winning the game. So we have all this information. Where do we write it? We can't just scribble it on a napkin. The very first place, the official place, where every single transaction gets recorded is in a special book. You can think of it like the business's own personal diary. And in accounting, we call this diary the journal. And this is what that diary looks like. This is the official format of the journal. You can see it has columns for the date, the particulars, that's just what happened, and of course our 2 friends, the debit and credit amounts. Everything gets written here in order, creating the main storybook of Rohit's business.
Okay, enough of theory. The best way to learn something is to actually do it. So let's take a real transaction from Rohit's business and see how we can use all these rules. Ready to solve a problem together? Let's go.
Here's the situation. Rohit's new office looks a bit empty. So he goes out and buys some nice furniture, a desk, a chair, worth 60,000 rupees. And he pays for it using a check from his business bank account. Simple enough? Okay, stop and think. Remember our rule, every single transaction has 2 effects to keep that magic scale balanced. So in this case, what are the 2 things that changed for the business? Come on, you know this, just think for a second.
Did you get it? Of course you did. The business got something in, right? Furniture came in. And something went out. Money from the bank went out. Now, here's the cool part. Both furniture and the money in the bank are assets. So one asset, furniture, went up, and another asset, the bank balance, went down.
And look, our magic weighing scale is still perfectly balanced. Why? Because the business just swapped one asset, cash, for another asset of the exact same value, the furniture. The total amount of assets didn't change at all. See, it's not magic, it's just pure logic. So simple.
And this is exactly how we write it in our journal, our business diary. You see, we debit the furniture account with $60,000 because that asset increased, and we credit the bank account with $60,000 because that asset decreased. This one entry tells the whole story, perfectly balanced. Simple, no?
Fantastic work, everyone. You're really getting the hang of this. I'm so proud of you. Now, before we wrap up, let's do a super fast revision. These are the absolute most important points you need to remember for your exam. Pay close attention.
Okay, let's lock this in. 1. Every transaction has two sides, a give and a take. 2. Our magic equation, assets equals liabilities plus capital, must always be balanced. 3. You debit what comes in or any increase in assets and expenses. 4. You credit what goes out or any increase in liabilities, capital, and revenue. And 5. We write all of this down first in our business diary, the journal.
And that's it. See, it wasn't so scary after all, was it? You have just learned the absolute foundation of accounting. You've worked hard, you've understood it, and beta, you are brilliant and you are ready. Now go and just ace that exam. All the best.